Welcome to Ready, Set, Real Estate, where we will help empower and educate you on many different aspects of real estate, finance, and investing. Each week, we will expand your knowledge and uncover hidden truths. We will break down real-world scenarios and study actual how-to strategies. Anyone can buy real estate, but together we'll ensure you make smart real estate investment decisions. Now, here's your host, award-winning author, international speaker, and real estate educator, Lisa Gillett.
Happy Wednesday. I feel like I need to add one more effect to that where there's woo, 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 woo. Yeah. Happy Wednesday, you beautiful people, wherever you are on this fantastic and phenomenal planet. Yes, planet is still phenomenal. I've got our 8-year-old who says he just loves Our Planet. There's a series on Netflix that's called Our Planet, and he is infatuated with the show. And I get it. I used to be that way too. I used to be fascinated with I still am with animals, and especially the sea. I am drawn to ocean. I'm drawn to water. I'm drawn to the ocean ecosystem and all that lives in it. All right. Okay. Announcements. Let's see what's happening. We are in second quarter. It's good stuff happening. So let's see. We are January, March, April, May, June. Oh my gosh. We are at, no way. April, May, June. We are at the end of second quarter. Get out of here. I'm looking at the date, June 28th. We're at the end of second quarter. How are things? How are you doing? Let me do a check-in real quick. Okay, so let's just go ahead. Let's talk about those goals. How are you doing for second quarter? Especially with today, we're going to be talking about this. Last week, we talked about the chaos in homeowners insurance. Prior to that, we were discussing ADUs. Some more news came out about ADUs. Today, we'll be discussing about the bank stress test and is your bank stable? But I really want to unpack this conversation about the bank stress test because there are a few moving parts in the market, the real estate market, particularly the commercial space, residential as well, but mainly this discussion on the commercial space with the commercial loans. So bank stress tests. We'll also be talking about this recent leak that happened. And I want to go back because I have been reading. Ooh, I've got to grab the book that I've been reading. Hold the phone. So I've been reading a book real quick. Let me do this. I'm pressing buttons. Oh, I know what I'll do. I'll bring the book that I've been reading because I want to have this discussion as we're talking about banking and real estate. So let me do this. Let's go to a quick commercial. Yeah, because I'm just going to jump right into the show specifically because I have a much awaited phone conference that I'm looking forward to. And that'll be around 11:40. So we'll wrap up the show today a lot sooner than before. So that I can jump on that call. So let me just do this. Let's do disclaimers real quick. All right, let's go through the motion of the show. You see, I'm excited about this topic already. So, of course, I wanted to talk about the goals, right? Goals, quarterly goals. We are in second quarter. And we've noticed that for some businesses slow, for some business picking up, depending on the sector. But overall, we're kind of feeling this pinch we call, right, the inflation. Cost of living, cost of things, cost of items are at a high. We're also being affected by insurance, right? This change with Allstate and State Farm, and then we're starting to see how that's going to have a trickle down effect with the other insurance companies. I'm hearing this about the increased in insurance premiums, both in homeowners and in car. We just definitely took on a new car insurance and got hit with quite a premium. So I'm definitely like, ooh, ouch. Wasn't expecting that, but we're still good. So a lot of moving parts. So with that being said, how do you get past all the, let's say the dings that you may be feeling during the second quarter of 2023? The key thing I want to say, the key thing I must say is to stick to writing your goals down. Stay focused, write down the things that you'd like to focus, address those priorities for the week, and just list your top 10. I have my board here to my left. I have a whiteboard, and I really am enjoying it because I get to my to-dos. When I walk in the office, I go, boom, I start to write it down. What am I doing? What do I need to do? And I start to knock that stuff down. And you feel like a whole better human being when you actually execute those stuff. You get it off your list, right? You get it off your plate. So how do you get through this slowness? How do you pivot when the market is pivoting? Is you move with it. Stagnation is going to be the enemy of progress for you. So I encourage you to keep moving forward. I know you're like, but Lisa, I can. I've got this bill, I've got this, I've got that, and I've got all these. Listen, we all have something, but we've got to keep moving forward progress, right? Because it's the energy that you're magnetizing. You want to be in the law of magnetism so that you are drawing those things to you. That way you can work less at it, right? Instead of feeling like you're forcing things to happen, you draw those opportunities, you magnetize those opportunities to you. Trust and believe the universe will conspire to give you all those things. So let me leave you with this, and then we're going to jump to a commercial break. So I will give you my affirmation. So the affirmation that I have used is, I have access to everything I need. Okay, so that's the affirmation. So I'll leave you with that. I have access to everything I need when you need it. Trust and believe, receive that. Write it down maybe 20 times. You should be journaling. If you're listening to this show, you're someone who takes notes, right? You've got a journal, you've got a notebook, and you're an avid writer. Get in the habit of avid writing. Why? Because you're co-creating your reality, your existence. What does your future look like? What do you want it to look like? It's a little difficult for the universe to help work with you and conspire to work for you if you yourself don't have a vision of what that looks like. So second quarter, if you're feeling that pinch, you're feeling stuck, stagnation, we're like halfway through the fiscal year, not your personal year, but halfway through the fiscal year. Receive this, that you have access to everything you need when you need it. All right. Okay. So when I come back, I'm going to bring back that book that I've been reading. And it almost seems like we're experiencing or we're symptomatic of, what we've seen happen in the market before. And I can't wait to come back after this commercial break. Oh, today's show sponsor who's our show sponsor? Today's show sponsored by, here we go, our very own Devenio Estates. We'll be right back.
We know how challenging it can be to try and sell a home while also dealing with other financial and legal matters. We're here to help. Devenio Estates is the real estate firm you need to make sure your unique situation is handled as quickly and efficiently as possible. Our team of professionals has a combined experience of over 30 years in real estate, construction, and finance industries. As active professionals in the industry, we know the importance of timelines and pride ourselves in providing superior service without compromising integrity. We use industry software and copyrighted proposals so that our real estate agents submit accurate and complete listing information and buyer offers. Our goal is to exceed your expectations and set Devenio Estates as the go-to real estate firm for excellence in advocacy and superior services for our clients. Contact us today to learn more about our services.
All right. All right, all right. Devenio Estates, that is my CEO, broker owner of Devenio Estates, our boutique firm based in Southern California. We specialize in unique situations. And yes, let me remove that real quick. We specialize in unique situations. Shameless plug, by the way. Shameless plug. If you know someone who is exhibiting something like the death of a borrower or property owner has a reverse mortgage that has been now called due, is facing foreclosure, has a notice of default, we are a brokerage that has specialized knowledge and skill in dealing with those products, because they are products and then they are situations or create situations for the heirs or beneficiaries of those estates. So feel free to pass the word along. DevenioEstates.com for those who are listening on our radio podcast. That's DevenioEstates.com. That's DevenioEstates.com. You can also reach the main office at 323-602-0688. Also deal with the managing of property rentals as well. For those captive landlords, those are landlords who have not, who've decided that they no longer want to be landlords, or excuse me, they've inherited property and are still trying to decide what they're going to do with it, and they end up pivoting to having to deal with renters. So we specialize in that. Evan Jefferson is in the building. He says, I have access to everything I need. Absolutely. You're right on time, because we're going to be having this conversation, and I'd love for you to chime in as well we're on this episode discussing, right, banks stress tests. When the market closes today, we're going to receive the report of how well our nation's top banks are doing. So what is the bank stress test? It's interesting, as it determines how stable the bank is, and our banking system tends to be reflective of our economic system. And I wanted to make sure we tied this in today with what the market is doing. Of course, I can't discuss real estate without discussing banking. A lot of our money comes from Wall Street, right? A lot of the money comes from our banking institutions. A lot of the money comes from the insurance companies, right? So these are entities that are all connected. So when last week we discussed about that insurance chaos, increase in premiums, the Department of Insurance putting on regulations here in California to some of those companies, what they just decided to do was not play. They said, we're just not going to play with your rules. And in fact, we're going to make it difficult for policyholders to renew their policies. And we are no longer going to offer new coverage for new homeowners in that state. So we're seeing insurance companies affected. And then this came across my desk as I was thinking of a show topic. This came across my desk that the FDIC accidentally reveals the details about Silicon Valley Bank's biggest customers. Why is this important? Well, for those of you who've been sitting on the sidelines saying, I'm waiting for the market to crash, I want to break some news to you. The Federal Reserve and the banking institutions have been making moves to avoid a repeat of the 2008, 2007 housing crises. This is the book that I've been reading, and this is a very important book here. I'm going to bring this closer here. So, very important book. So this book is called Home Wreckers, How a Gang of Wall Street Kingpins, Hedge Fund Magnates, Crooked Banks, and Vulture Capitalists suckered millions out of their homes and demolished the American dreams. So I'm bringing this up again, I feel like I'm halfway. I'm not even halfway through the book. I'm at the part where he just shared who bailed out Michael Jackson out of his foreclosure of the Netherlands, right? Well, Neverland, the Netherlands, Neverland. Who bailed out? It was a billionaire called Thomas Barrack, right? Thomas Barrack Jr. And he agreed to what is the African American dream? I like that one. See, let me address that. I definitely would. Oh, that's a good one. That's a good one, Evan. So, I'm just speaking of African American dream here, where I'm learning something of Michael Jackson, and he was in foreclosure, owed 23 million. Barrick said to Mr. Jackson, I agree to pay this and help you out of this foreclosure if you go back to performing, or you just get out there. You show people that you are Michael Jackson, even if you do an interview on a daytime show or a nighttime show. If you do one or two performances, just get out there and let people know that you're Michael Jackson. And as part of that agreement to help Michael Jackson out of foreclosure, they signed an agreement, and that was a stipulation that he would get back out there. I didn't know that. Anyone knew that? So he paid the $23 million and got him out of foreclosure. And then Michael Jackson died a year later of purportedly a drug overdose. I say purportedly, allegedly, because everyone have their different theories of kind of what was going on at that time for him to have died over drug overdose. So brings me back to this. He dies of a drug overdose. The billionaire who just put $23 million to recover the estate then puts it on the market at the time of the book for $67 million. One of the things that they were talking about was ownership, right? Like who really owned what? Who really owned what? So I think I'm going to throw Evan's comment in here as we discuss this. Who really owned what? I was talking about homewreckers, how all these, vulture capitals, et cetera, suckered millions out of their homes and demolished the American dream. What is the African American dream? Evan says. He asked that question. I pose it to you, Evan. What does that look like? Is that a personal? Dream? Is there a collective dream? Because as we read books like this one, right? As we read books like The Color of Law, how the government, was involved in redlining, steering, and cutting out that quote unquote African American dream, if we're referring to ownership, home ownership, property, real property ownership. We've got a long history of that. So what is that African American dream today as we relate it to what is happening in banking? How many banks that are Black owned are still around? I just recently learned there's a difference between a majority Black depository institution versus a Black owned banking institution. And that came to my attention as I've noticed that Broadway Federal Bank, who once upon a time was Black owned, now has on their website that they have joined forces, or I think City First is what it's called, and has taken over the bank. Of course, leave it up to Evan to make me to dig deep, right? Like talk about this. City First Bank. I got to, and it's formally Broadway Federal here. So this was a Black owned bank. Let me change my screen here. I'm going to pivot here real quick. And I scrolled down here and I wanted to find out about. And when I went to about, it had an interesting verbiage here. This line right here is what jumped out at me on the about. It says, we are a designated Black-led minority depository institution. Black-led minority depository institution. So as we talk about the African American dream, in relation to this banking, right? How healthy is the bank? Finding out what the FDIC has done with covering deposits for other banks that were not in danger of collapsing. We know of the 3 banks that did collapse, but the FDIC actually covered deposits for banks that were well funded, well secure, well stable. Why would they do that? And so I asked this question. There's a difference, right? It's just like when I say to folks, there's a difference between saying you work or you're supporting a Black-owned real estate brokerage versus a Black real estate professional who works for a non-Black real estate company. There's differences here in terms of this collective African American dream that we're working towards, right? There's a difference. And it's really interesting because I'm also a member and I receive information on the Latino group where they've got an entire movement in terms of home ownership and the increase of home ownership. And despite what the market is doing, despite what the interest rates are doing, we have a strong demographic of young Latino millennials who are purchasing with their nuclear family, right? Grandparents, parents, they're all pulling their funds together and are making that first purchase. And then from that purchase, they're then, everyone springs off and then, hey, you chip in, buy this house, then we buy the next one and so forth and so forth. So this dream that we're referring to, or you're asking of, Evan, I often, and you and I have spoken on and offline, and I've spoken with, different people in our groups as it relates to what we're seeing right now. What is the African American dream? Well, here's what's interesting, because there's been this recent conversation of, protecting home, the wealth in property ownership. And given that I'm pursuing law, and given that I'm delving more into probates, trust and estates, or probates, estates, and trusts, we're seeing more and more families litigate, meaning they're suing each other over the family home. Now, because a lot of where I work and my clientele tends to be African Americans, our African American communities, properties. And interestingly, I've had this conversation with someone who's in construction and said that he was part of a community coalition meeting and said that Black home ownership in a few years will be extinct. So, Evan, what is the African American dream? And is the dream by one big enough for the dream of many? Is the dream of one big enough for the dream of many? I can't want for you what you don't want for yourself, or the tough conversations or discussions that need to have amongst family members. Like, I've got a couple clients right now who a spouse is experiencing early signs of dementia, Alzheimer's. I'm no medical doctor, but the wife is saying, yeah, he's forgetful, and to the point that he's forgotten to make his mortgage payments, which is why I'm involved now. And I asked a simple question: do your children know? No, they're in their 70s and they have not shared with their children that dad is experiencing this, or that they have missed a couple mortgage payments, that they are experiencing a foreclosure, a pre-foreclosure. So we're not having those conversations. So we're going to have them on Ready, Set, Real Estate. We need to make sure. So make sure, with that being said, price of admission to have this conversation is what? Press 1 lets me know you're here. Press 2 lets me know you shared it. And if there was anything that you felt was a mic drop moment, drop that emoji of the mic so that I recognize, so I can feel that you're feeling me, right? So let's continue. The FDIC accidentally reveals details about the Silicon Valley Bank's biggest customers. I put that in relation or in connection with this. How safe are America's biggest banks? The Fed's imminent stress test may offer clues. So, as I was sharing this Wednesday, when the markets close, we're supposed to get the report of how healthy or how stable banks are. Essentially, this was a report or a test that was created after the Great Depression. And certainly, to the comment in the article said there's no guess that Signature Valley Bank was not properly capitalized, right? Undercapitalized, and certainly would have failed the bank stress test. But here's what I think is a little bit deceiving about the stress test, especially amidst the time you just shared, that we've just learned that the FDIC covered deposits for banks that weren't even in trouble. So everyone should be good, right? All these banks should be fine in terms of being capital and liquid in the event of an economic downturn, especially as they're using this term. Depending on who you ask, we're in a recession, and depending on news media and outlets, they say we're border a recession, and everyone's saying a recession is coming. And I think about Rev Ike, where he says a recession is when you don't have a job. He says a depression is when I don't have a job. Rev Ike, wise man, wise words. And so that's why I bring that point up, because it depends on who you ask in terms of how strong, right? How bullish, bearish is this economy that we're experiencing? I certainly am seeing it. In fact, I met with an appraiser on one of our deals that we have in escrow yesterday. And I asked that question: how's business? You ask the question because you want to see what is the sentiment from the other working professionals in your industry. What's the sentiment? And he says, very different as opposed to last year or during the pandemic, which we've seen. We've seen some companies fare out a lot better during the pandemic because the government was giving so much money away. So much money. There's so much money. And then, of course, we do know they're policing that money. They're coming after people who weren't supposed to get that money and that whole thing. But despite all that, we saw a lot of profitability. P&Ls for companies look pretty solid. And so the appraiser said to me, business is slow. He said, and well, you probably know that because of the interest rates, these hikes in rates. What I find interesting in the residential sector is, I also want to bring this conversation with the commercial sector. While I would say I dabble in commercial when I need to, when I'm dealing with my residential clients. Commercial is not really our focus or my focus, right? Of course, I have people on my team that do commercial, but it's not my focus. So I've been watching commercial closely because historically is what we've seen is when commercial is impacted, it is, people say, no, there's no effect. But I would disagree when I understand the ecosystem, right? The intercodependency between residential and commercial. Right now, we're saying the office sector is being impacted in the commercial business. And here's why the stress test can be misleading at the same time as we're watching the commercial markets, is because This stress test is just determining how capital, right? How capitalized the banks are. But what is looming in the background in the commercial space, and we've been saying this for some time for the last couple months, and I've been hearing it get louder and louder, is that there are, I think it's upwards of billions of dollars in commercial loans that are due, that will be coming due, and some already coming due from now to really we'll start to see it in 2025. So within 2 years, right? Are we at a like 36-month mark? Oh my gosh, that's incredible. 2025. But with that being said, we've got these commercial loans that are due for payment because a lot of commercial loans tend to be done with interest only products with balloon payments due in a 15, 20, 30-year time frame. So now we have those loans coming due. However, the businesses who hold those loans and owe that money, mainly the office sector, don't have people returning to work. Therefore, you don't have people utilizing office spaces. And you can see that. Just look around your commercial buildings, your office spaces. You see the for lease. You see the offers being made, right? There's concessions that they're willing to make to fill those spaces. You see a bigger push from corporations and big companies to force people back home. And I've been reading different headlines about that. I haven't delved too much into this topic on, you know, trying to offer benefits now. Now you're trying to offer benefits to get people to come back to the office versus maintaining remote working from home. And one clue into that was when we went from during the pandemic, it was, oh, working from home, you know, made people more efficient. They were more happier. This was the way to go. And then now I'm reading, they're saying that people are not as efficient. There's a lot of wasted time and they should return back to work. So it's really interesting how information definitely can be biased. And that was one thing I remember reading or learning in statistical psychology was paying attention to the data and who is reporting the data, right? What is the source of data? By the way, these headlines and this information, speaking of data and the source, this is from CNN that has been popping up on my timeline about what's going on in the banking industry. And so I thought it was timely for us to have this discussion because we are in second quarter, halfway through the fiscal year, and we're reading how the Federal Reserve's, you know, what are they doing to hedge against inflation, how that is certainly slowing down and affecting the market. But from a real estate perspective, for those of you who have been trying to be strategic about waiting and sitting on the fence, be mindful that, and I've said this before, you are all waiting at the same time and you will all jump in at the same time, therefore driving up the cost of the product, right? This is economics, supply and demand. And this is Econ 101, is when you have a higher demand for something and you don't have enough of it, like housing, like property, you will see an increase in the price for who is willing to pay the highest. So to that, I say, do what's right and what makes financial sense for you and your situation. If it makes sense to wait a year, 2 years from now in anticipation that the rates will drop, well, guess what's going to happen? Those who are purchasing now in this higher interest rate market at the lower price point, i.e., investors, i.e., those who are looking to get their foot in the door and then 3 to 5 years from now are going to sell when rates drop, are going to realize that gain. They'll be in a better position than those who'll be jumping in the market in that 2 year period from now. They'll be competing again with the other buyers who were all sitting on the fence. So again, it makes sense to lead with your own right. What is it? Dance to the beat of your own drum. versus trying to do what everyone else is doing, is because what will happen is, in this herd mentality of trying to wait and you all wait at the same time, we'll see another incident or episode of what we experienced during the pandemic, with everyone jumping in at the same time and everyone driving prices up the way they did. So just be mindful that you are the one that is co-creating what your experience is. This is why I started off about writing down those goals, because real estate is certainly one of those goals. Is if it's something you're looking to attain, envisioning the area, envisioning what your mortgage payment is, envisioning, what do you need to do for savings and so forth. Like, that's a plan. That's not an overnight thing. You wake up one day and say, I'm going to jump in the market and buy property. That is a strategic plan that also comes with strategic tax planning for you, right? All right. With that being said, we're right on time. I'm going to wrap today's show up with that. I think I've ended it on a good note, which is you should be moving and thinking strategically for what makes financial sense for your situation. All right. With that, I say have a powerful and productive week. We'll see you next week on another information-packed episode of Ready, Set, Real Estate. Take care. Bye.
Thank you for listening to the Ready, Set, Real Estate podcast with Lisa Gillett, the LA Super Agent. Please like, subscribe, and share LA Super Agent